Coming up, caution reigns. The Aussie market closes just above the black line as investors remain guarded ahead of the much-anticipated US jobs report. Plus, a takeover battle could be brewing. Eldorado Gold approaches Andean over a potential merger agreement, but the Aussie miner says it's already in talks with another unnamed party. And Fortescue Metals denies allegations it breached a funding agreement with its third largest shareholder.
This is Market Day.
Thanks for joining us. First, a quick reminder of how the Aussie share market finished the day and the week. There you see the very slight gain for the benchmark today, 0.2%, up 8 points to finish at 4,541 points today. Certainly for the week as well, breaking that 3-week losing streak that we had, the benchmark there gaining close to 4% for the week. It was off the highs of the session though. We were up a lot more earlier on in the day. The high for the benchmark today, 4,558 points. Well, our guest host joining us today is John Noonan, Senior Analyst at Thomson Reuters. He'll be with us for the full program. And joining us now for some more analysis on the Aussie market is Julia Lee from Bell Direct. Great to have you both on the program. Thanks for coming on. Just firstly, I mean, obviously a nice gain there. It's such a quick shift, though, from the bearish sentiment, it seems, of just a week ago. I mean, do you think that it's really justified, the gains we're seeing?
Well, you know, we had such a bad August. Risk assets across the board didn't fare well at all during the month of August. And I think perhaps maybe investors got overly bearish. I think there was real fears growing right through the month of August that the U.S. was going to go into a double-dip recession. I think some of those fears were probably overblown. You know, sort of lingering fears that maybe China slowdown would be coming at the wrong time, and that would affect asset markets around the world. And also, too, you know, there was a few hiccups in Europe along the way as well, and some raising new concerns about sovereign debt, which probably were a little bit overblown. The IMF came out this week and said the market's way too bearish in pricing in the chance of a default in peripheral Europe. So perhaps I think we're coming from a very low base of expectations by investors, and I think that, you know, we got some better data out of the U.S. Along the way. We got some strong manufacturing data out of China, and so a lot of that sort of overly bearish sentiment was lifted, and so we've seen a nice relief rally. You probably couldn't call it too much more than that at the moment, though.
Okay. Julia, just wanted to get your thoughts too on the Aussie market action this week, but also today, because obviously we saw those gains pared back right to the close there.
If we have a look at the S&P ASX 200, it was only up by 0.2%. Now, if we have a look at really what drove the market today, it was the smaller cap companies as well as the mid-size cap companies which outperformed. In fact, if we have a look at the top 50 blue chips, our biggest 50 blue chips, they were quite flat overall. But if we have a look at the mid-cap index, that was up by 1.2%, and the small ordinaries index was up by 1.1%. So it was those smaller companies which outperformed, and those blue chip companies which were pretty flat on the session. Of course, our market just treading water ahead of those non-farm payroll numbers for August. The market is expecting to see 105,000 jobs having been lost, but it is the private sector part that the markets will be watching, because a lot of that headline number will still be due to census jobs, temporary government jobs coming out. So if we have a look at the private number, expecting to see 47,000 jobs having been added there. And I guess the biggest risk is that those numbers could surprise on the upside this time. And I guess that would be, I guess, the most shocking scenario to the market. But altogether, some of those leading indices for those job numbers looking on the positive side, although we did see the ADP survey out earlier this week, which did see a negative 10,000 job loss.
I know, Julia, obviously you follow those technical levels very closely as well. How did you read those this week? And I mean, are there any bullish signals forming?
If we have a look at the US market, it was interesting to watch the S&P 500 bounce off that 1,040 point level and then really rally up quite strongly. So we're at 1,090 at the moment, about 1,100 points. If we could break past that, perhaps this rally has more legs. On the Australian market, we did, for the second day, finish below the 38.2% Fibonacci retracement mark. Now, this is from the high of the market that we saw in 2007 to the low of the market that we saw last year. And that number's at 4,546 points. So it's the second consecutive day where we have intraday come up to that mark, but once again closed below it. So looking like that is acting as a bit of a resistance at the moment. Of course, we've seen this sideways movement now on the Australian market. If I bring up the one-year chart for the S&P ASX 200, this is what it looks like. And you can see we've just had these massive swings up and down now, all the way since May, and it does look like that's once again continuing. So to see the end of the pattern, you really want to break the upper end of that mark, which is just past that 4,600 point level. And I think if we pass that mark, it might be a new era on the charts, but for the time being, we're just gyrating between around 4,600 and on the downside about 4,200.
Yeah, hi Julia, John here. Yeah, sticking with the technicals on the ASX, I think it's really interesting. We have so many tops between 4,600 and 4,700. Then, of course, at 4,700 also, we have the 38.2 of the year's high to the year's low, or 61.8, I should say, of the year's high or low Fibonacci. I think if we get above 4,700, good chance we move to 5,000, but we've had this conversation before, haven't we? And it just keeps coming down from this very strong resistance level.
It does feel like deja vu when we talk about the technical levels, because the market is just sort of in no man's land at the moment, and we've just been going between these points. If we do get past 4,600, 4,700 points, then really no huge resistance levels to that 5,000 point mark. But for the time being, I guess the chart pattern still looking bearish unless confirmed otherwise, looking like the market wants to rally up, but I guess it all depends on the non-farm payroll numbers coming out tonight.
Is there an impact, you think, too, from the fact that there's election uncertainty continuing? I mean, we might obviously have a breakthrough with that next week. I mean, what are your thoughts? Is that sort of priced in, or is it, a risk?
I'm quite amazed by how sanguine investors are about the fact that there's a hung parliament existing at the moment. The share market is doing really well this week. The currency is, we're going from strength to strength, establishing a foothold above the 90-cent level. The economic numbers coming out are very strong. I think there's a view by some investors that no government is good government, and as long as there aren't any major issues such as the mining tax issue out there that hanging in the balance, it doesn't seem to me as if investors are all that fussed.
Julia, would you agree with that?
Yeah, it does look like the share market has pretty much been ignoring what's been happening on the political front. In fact, we've been mainly driven just by the offshore numbers coming through, China's PMI numbers and better numbers coming out of the US, and I guess a very high correlation still with the US. One interesting relationship I think this week has been gold prices and equity markets. Usually if you do see better than expected economic numbers coming out driving the market, as we've seen this week, you usually see a pretty substantial pullback in gold prices, but we really haven't seen that this week. In fact, gold prices still near record high levels and looking like they may still go on to test a new record high. So altogether that relationship looks quite interesting because we haven't seen the usual pullback in gold prices as equity markets have rallied.
I know you've touched on this as well, but just the strong Australian economic picture really highlighted this week. What did you make of all the data, John? I mean, the GDP figure was just quite a surprise to the upside.
Well, it's just more confirmation that the Australian economy is going very strong at the moment. As Julia's mentioned, our market's very often driven by what's happening offshore. So if you get some sort of calmness in terms of worry about the U.S. economy double dipping, worrying about the China economy slowing too much, if those worries fade, if you look at Australia in isolation, and if the market risk appetite rises very strongly, as it appears to be doing at the moment, Australia really features as one of the very important destinations for investors, and that's why the Australian dollar is getting very strong. Our yields are higher than everywhere else. Our mining sector is strong. Commodities are strong. So it really, if things do come offshore, there's no doubt that the Australian economy is going well enough and will be an attractive destination for investors.
And John, too, I mean, were you heartened as well to see that the data on retail sales too, and the sense that consumer spending, the fact that private investment too is coming back in to replace the public investment that's been withdrawn? It was really a factor in that GDP.
Yeah, I mean, there are some spotty aspects to some of our data on a regional basis. There's some regions doing much better than others. But if you look at in total the Australian data, there really is not a weak point. Investment is strong, as you say. Retail sales are holding up relatively well, despite some fears that they wouldn't, particularly with the interest rates going up in this country as they have. It's a very sturdy, robust economy that we have here in Australia. Very buoyed by the fact that China is going well, but still, the economy here is looking good.
Julia, just wanted to quickly get your views on a couple of the big corporate stories out as well today. Fortescue denying those claims from major shareholder Lucadia. I mean, this can't be good for the stock, though, or having to be involved like this in a bit of a stoush with a shareholder.
It's a major shareholder too, so the third largest shareholder, and Lucadia is saying that, you know, Fortescue didn't have the right to issue more notes, which diluted their rights to a 4% royalty, and this is for the funding of Chester as well as for Solomon. So altogether we have seen Fortescue's share price over the last couple of sessions being dragged down by this. So the market not viewing it too favourably, not good news for Fortescue's share price when we've seen the other majors like BHP, Billiton, Rio Tinto gaining ground over the last couple of days.
And a couple of stocks embroiled or in potentially facing class actions, Sigma and Nufarm as well, their shares suffering too?
Nufarm absolutely having a terrible week. In the week to date, this week, we've seen Nufarm shares losing 11%. Not only have they come out to say that they've seen a blown out in debt, in fact, the net debt rising by 38%, but now they're also facing a shareholder action over disclosure. So altogether, Nufarm shares coming under a fair bit of pressure. 28th of September, that they're going to release their full year results, so it should be an interesting one, but it's been one of the worst performers this week. The other one, Sigma, which is also facing potential action as well. The share price also down, but not as much as we've seen in Nufarm shares, and I guess Nufarm just hit with that double whammy where they have come out and said there have been minor breaches of banking covenants, and they're trying to work something out with the banks at the moment, and then also this class action on top of that.
And just quickly as well to gold, I know you're both mentioning it there, but Eldorado, this merger proposal for Andean there, but yet then Andean saying, look, it's in talks with another unnamed party. This consolidation, though, in the gold sector sparked by Newcrest, you expect this to continue?
If we have a look at consolidation in that gold sector, 2010 has been an absolutely massive year. I think global deals in this area are equal to about $35 billion US dollars, and we've seen some big ones here in Australia. We've seen Newcrest mining, Lihir Gold. Overseas, we've also seen the Redback one as well, and now we're looking at Andean, and it does look like a potential takeover battle here. Eldorado Gold looks to be interested, but Goldcorp also looks to be interested, and it does look like media reports saying Goldcorp's offers coming in at a higher price at the moment. So it should be interesting. If we have a look at how Andean shares traded today, they only traded for half an hour, and if you have a look at this share price action, this is what the chart looks like. You can see it wasn't very long trading, but the shares jumping more than 30% in that first half hour of trade before it went into a trading halt. Yeah,
one to watch that one, absolutely. And just on the whole M&A activity, I mean, we've talked about this before, John, that we've seen a real spike in it in the past month or so. And do you still hold that view that BHP lobbing that bid for potash is sort of something we'll look back on as a bit of where the game changed slightly?
Well, the one fact is very evident out there is that a lot of major corporations are really loaded up with cash, probably in an unprecedented manner. And they need to put that cash to work themselves, just as investors at some stage will have to. And one of the ways they're doing this is through takeovers. So you're not going to see these leveraged buyouts like you saw pre-2007, 2008, where you saw all sorts of collateral dug up from everywhere to make these buyouts, minnows taking over major companies. But you're seeing a lot of companies that have plenty of cash right now. They want to expand the business. If they see areas of expansion that can help their bottom line, they've got the cash. They don't have to go to the markets to raise the money as they were prior to 2008. So yes, I think there will be a lot of talk. There'll be a lot of things in the pipeline. How active those deal making, we're going to see some hesitation along the way because values are very low right now, so companies are going to be resistant from these cash takeovers. But I do think that as long as the risk appetite stays strong by companies and they have all this cash that they have to put to work at some stage, then you'll see a big increase in the M&A activity.
Julia, just on that BHP potash bid as well, I mean, there seems to have been some hurdles appearing throughout this week. Talk that the Chinese aren't happy. They want to look at an anti-monopoly investigation. Canadian pension managers approached by Chinese companies reportedly as well. And also then the Canadian Saskatchewan as well, considering royalty changes too on this. And also then reports that BHP is looking at perhaps a US oil and gas